Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, the markets continue to remain volatile for a second day on the trot, with the Nifty shutting shop below that 19,600 mark, even though it managed to open around that level, at 9:15 a.m. But if you look at the mid and small cap indices, they managed to edge back in the green and in fact ended with gains of somewhere around 2 to 3/10%. Nifty PSU banking index, that index saw a good rally of 3% coming in the second half. Nifty banking index also edged back into the green around midday or so. What didn't do all that well was the metal pack. That index was down 1% or thereabouts. Autos, FMCG were among the top sectoral losers today. Aside of that, if you look at the top Nifty performers today, Hero Moto, that stock was among the top Nifty gainers on the back of good bookings for Harley X440. In fact, bookings have crossed the 25,000 mark, and that on the back of that, the stock was up and about in trade. You had Cipla that hit a fresh 52-week high. Some IT names like Tech Mahindra, Wipro were among the top Nifty gainers. SBI Life, Axis Bank, Bajaj Finance, and even SBI was among the gainers today. On the losing end, you had Power Grid, Hindalco after the margin miss in the first quarter. M&M, Divi's Lab, Britannia, Nestle were among the top losers. Let's talk about some of what the action was looking like in the mid-cap end of the markets. Yatin, would you like to take us through some of the movers and shakers?
So clearly, Gland Pharma, and along with that, a lot of these pharma companies were doing well in trade. In fact, post the earnings, Gland Pharma shares hit the 20% up circuit limit in trade. Obviously, if you look at the numbers, there was stark improvement. Probably on a year-on-year basis, you will find the numbers slightly down. But yes, versus the expectations, numbers were quite strong. Apart from that, we had the PSU banking stocks which were doing well in trade. Today, Bank of Maharashtra rose 7%, Indian Bank rose 13%. So I think post the results, there is a lot of consolidation and uptick which is now seen in PSU banking names. In fact, the PSU banking index was one of the top moving indices for the trade today. What was not doing well is Graphite. After announcing a 1,000 crore land deal in Bangalore, that stock saw some profit taking, 6% down. Electra post weak set of earnings, down 5%. Policy Bazaar earnings below estimates, and that stock also saw some profit taking at high levels. Stock ended up nearly 5% lower. So, when it comes to the result season, a lot of reactions in the mid-cap space, especially if you look at the mid-cap pharma names and the PSU banking stocks, they were quite active in trade today, Nandita.
Right, those are some of the movers and shakers in the mid-cap end of the markets, and I have one of those stocks on my list today for this afternoon, Gland Pharma, of course. This stock saw a 20% rally coming in, hit its upper circuit after better than expected numbers in the first quarter. In fact, there was a sequential improvement aided by strength in the US business that's coming in, and that's something that boosted the stock performance as well. The US business is the largest geography for Gland Pharma, and it accounts for 67% of standalone sales. The company had seen an aggressive product launch in the quarter gone by. In fact, it had launched somewhere around 23 products in the US, and momentum in the US operation is coming back. In the past, it had been impacted by exit of 2 clients as well as competitive pricing by Chinese players, and that is something that had come as a setback for the US business in the past, but that seems to be fading away now. And if you look at the company's track record with US FDA, it has been excellent. In fact, the US FDA has recently completed inspection at 3 of its sterile plants as well. Gross margins were, of course, improving on the back of contribution from recently acquired Sensex. The Q1 sales for Gland Pharma jumped 40% on a QOQ basis, helped by this new acquisition. In fact, the acquisition has allowed Gland Pharma to focus on complex products with limited competition. So that's something that's boding well for Gland Pharma. In fact, brokerages are also seeing a recovery in its base business. Bernstein, if you see, has an outperform rating at the target price of 1742. Jefferies has upgraded the stock with the target price of 1640 or thereabouts. In fact, my colleagues or analysts at Moneycontrol Pro believe that margins are likely to stabilize around 30 to 35% in the medium term for this company. And the stock, if you look at the valuations, at 12 times EV EBITDA for FY25, the stock looks pretty much reasonably valued at discount to its peers. That's according to Moneycontrol Pro. And the stock is still 38% away from its 52-week high. So there's a lot of room for the stock to go up from here. And you know, aside of that, as I mentioned, US business is seeing some momentum coming back, and that's something that is boding well for this company.
Absolutely, and Gland Pharma, clearly the stock of the day as far as today's markets are concerned. But also in news was the share of Maruti Suzuki. Now, if you know, along with the quarterly earnings, Maruti announced the intention to purchase Suzuki Motors Gujarat. Basically, it's a plant located in Gujarat, wherein Suzuki Motors, which is Maruti's parent and the promoter company, owns this particular plant. Now, according to Maruti Suzuki and the information which is available on the stock exchanges, most likely Maruti is likely to purchase this plant from Suzuki Motors at book value, which is close to 12,300 crores. Now, the interesting part here is that today the company said that instead of providing cash for the plant, Suzuki Motors will be issued shares on a preferential basis. Now, this leads to equity dilution, but no cash outgo. And Suzuki Motors being the parent of Maruti Suzuki will get an opportunity to hike their stake. Of course, this is subject to shareholders approval, and in the upcoming AGM, probably the shareholders will look at this particular transaction, but most likely according to brokerages at a 4 to 5% equity dilution, the deal is better than a cash outgo, and the promoter Suzuki Motors will be able to hike stake in Maruti Suzuki. And Suzuki, obviously, instead of investing 18,000 crores in such a large plant like Gujarat, they'll get the plant on post depreciation basis, which is the book value. So, in general, at a good valuation, this transaction is probably going to culminate subject to shareholders approval, and probably that is the reason why the stock of Maruti Suzuki was up by nearly 0.5% last time I checked post the announcement of this transaction.
Right. I think when this whole deal was announced along with earnings, I think this was an overhang given the fact that brokerages were expecting, especially CLSA was expecting an outgo of somewhere around 900 crore rupees. That would have led to EPS dilution as well as cut in ROEs as well. But now that seems to be, subsiding given the fact that they have indicated as to how they plan to go ahead with this transaction. Well, on that note, let's talk about my second stock, Emami. The numbers came out yesterday during market hours, but the stock was up 7% today on the back of strong or buoyant outlook from the management. But let's first look at what the brokerages have done. They have Jefferies rather has a buy rating on the stock with the target price at 560 per share. It says that the management outlook has turned better on the back of moderating inflation, and that's particularly something that has weighed or that has worked out for the stock in today's session. The summer portfolio, however, was impacted due to unseasonal rains. If you see, Navratna sales were down 5%, but Dermicool sales were up 9%. Boro Plus, Kesh King sales grew 19% and 2% respectively. The Kesh King sales were impacted due to slowdown in discretionary spending and consumption and a high base of somewhere around 20% growth compared to the same quarter last year. If you look at the management commentary, they are optimistic on rural demand and for FY24 growth as well. They expect margins to rise by somewhere around 200 to 250 basis points. So that's something that has worked well for the street, even though numbers were a little subdued on the back of unseasonal rains. It's the confidence and optimism that the management has talked about with respect to its margins and FY24 growth that has sent the stock rallying by 7% in today's session. In fact, if you look at the stock, it has done fairly well over the last 1 month. It's up 16%. If you look at the price to earnings ratio, in fact, looking at the sector PE, it's pretty much at 30.9, which is in fact half of what the sector PE looks like at the current juncture with 64.6x. So that way the stock is fairly priced, and return on equity for the last financial year was in excess of 25%. So a healthy return on equity as well.
Yes, and of late FMCG stocks which were under pressure for the last 1 or 2 quarters relating to margins as well as stock performance have started to rebound. The other stock on our radar is Indigo. Now, if you look at Indigo, obviously post the earnings, a lot of brokerages were positive. Q1 results were better than the street expectations. However, the management does expect some pressure on yields in Q2 given the fact that crude oil prices have risen. Now, if you look at the brokerages, they do expect some bit of upside in the counter. In fact, HSBC has a buy rating on Indigo with a target of 3230, which means that from the current market price also they expect a 20 to 30% upside. Now, if you look at the unit cost for Indigo for the first quarter, it was down 18% year on year. Soft yield outlook was something which was concerning, and that put pressure on the stock. But moving ahead, given the fact that the company has a strong fleet expansion plan as well as the aviation industry growth in India is quite strong, Indigo is probably in a sweet spot to monetize the upcoming growth. In fact, HSBC believes that the strong balance sheet could open path for dividend payments also ahead, and hence they are bullish on the stock of Indigo.
Right, even with respect to Pratt and Whitney issues, they've said, the management was there on CNBC TV 18, I think, after earnings, and they've said that it's not really something which is blown out of proportion for this particular airline, which is good news for Indigo. But with that, I think we've come to the end of this edition of Closing Bell. If you have any feedback that you want to give us, leave them in the comment section below. And of course, for all your other news and updates, stay tuned to Moneycontrol. I'll be back with the markets at 8:30 a.m. So don't forget to tune in. For now, it's a goodbye. Thanks a lot for watching.